Traders, welcome back to our price action trading lesson. We're looking at S&P 500 and many futures. The structure of the market right now is presenting a trading range with consistent price swings up and up and down through the EMA. The supportive indicator 1 bar EMA is completely flat, and as a price action trader, I have to follow a short-term trend line rule because once there is a break in new extreme, the market should pivot, especially in a trading range like this. What's also important is you have to identify the low of the day support, high of the day important key level. You don't want to be drawing a bunch of these insignificant key levels on a chart because they are simply not as significant and they will only confuse you. So identify the most important key levels at the extreme of a trading range and follow short-term trend line rule. So as you can see, break a new low pivot, break a new high pivot, downtrend is in place. So we expect for prices to test the new extreme upon breaking this downtrend. So this is how we're going to identify where the market is going to go by using these trend lines. So you have new low, first entry short pullback, second entry short if there's going to be break. Actually, very tempting setup because you can also see small triple test, consistent EMA rejections, and this is a second entry short. Problem is the signal bar is a little bit weak. You can see the tail at the bottom, but more importantly, this is exactly around the open, and we're going to be a little bit careful trading the open because there can be spike in volatility. Had there been stronger bar, you can consider, but given the open and given the weaker bar, I'm gonna pass. But great context, and this is how a good setup would look. And market created break and a new extreme. So right now, once we create a break and new low, I have to pause looking to sell because we may reverse. However, I cannot go long randomly below the EMA. I want to see some push above EMA. So I cannot go short, but I cannot go long. We're still below EMA. And you can see, by the way, how each new bearish push down is getting weaker and weaker. You can see it is getting more and more sideways, more and more static. This is really sideways structure right now. This is indicating bearish depletion. They're really struggling to go lower. It's just a matter of time before the bulls will step into the market, playing the range rules, and we're breaking above EMA. And we may have felt second entry short. So this would be a potential reversal pattern. Okay, downtrend played out, exhaustion, buyers are stepping into the market, new low, first entry short, second entry short feather. There's going to be a break above this bar. Problem is, look at the signal bar. Bearish body, a little bit weak. So because the signal bar is not showing signs of buying pressure, we can't really take it, but it's a great context. And we even have, shortly after, second entry long. New high, first entry long, pullback, second entry long. This would be another great setup, a little combo. Now you're above EMA, but the same problem. The signal bar is bad. So these are great setup context-wise. You can see bullish reversal happened, but the signal bar itself was a little bit weak. What I'm expecting right now? Well, I have to use market geometry and I have to identify a brand new channel. And right now we expect market to go higher. Okay, so this is what we do. We follow these channels, we understand where the market is going to go, and we want to take the hypothesis up. So great setup context-wise, but signal bars were bad. We are correcting. So what I have to do now, I have to expect new high for this uptrend. And I have to count. Actually, I have micro double top, which means I have to reset the count. First entry long, count reset, I have to use the second top. First entry long, so I want to see second entry long. The hypothesis setup, two-legged pullback at the EMA. Okay, no break below, so there's no pullback. So the first entry long is still in play, and there was no second entry long. By the time I get it, it's here, horrible bar, you cannot take it. And I don't like going long right into these highs because it is basically forming double top. Okay, break a new high. Perfect context, perfect price action, predictable, but there was no good pattern, unfortunately. So you have a break in your extreme. So right now what you have to do, once again, as you did here, you're going to observe the structure and you're pausing, looking to go long in this temporarily because we can have correction or reversal. You're going to be observing the EMA and hold on, why only a first entry long is generating such a significant push up? Why is EMA holding every single time and we keep working higher? So once I saw this, I zoomed out and I realized we may go from the very bottom of the trend range to the top. This right here may be the target for the traders in the market. And because from the very beginning, EMA is rejecting every single time. And after new high, there are so many pushes higher, I have to look for some bigger channel. So this was the channel I was looking for. It aligns nicely with the EMA. So hopefully it makes sense. You don't want to widen instantly after breaking your high, but once you see so many pushes higher, only first entry is working. You're probably heading all the way up here. So this trend line is nice. You're looking for second entry long. Micro double top can reset again. You have another first entry long doji, not full at the EMA. So once again, predictable price action, but there's just no clean setup. Market keeps working higher. So you're not thinking about selling. This option is giving you the bias, it's giving you the direction. You want to wait for correction phase to end and the buy at the bottom where the push phase will begin. Can we get a second entry long hypothesis setup and no second entry long? So a little bit unfortunate. It's part of trading. First entry long. I'm still not losing my hope because the option is still in play. As long as this option is in play, I'm not thinking about selling. Now we have overshoot. I'm not really too concerned about the trend range structure now because from the very beginning all the way up here, we basically never truly broke below EMA. You can see once you see EMA rejecting consistently like this and you see so many first entries working, this is the main pattern in this market. This is a clean uptrend. However, overshoot can generate stronger pullback in the opposite direction, which means I right now have to be a little bit careful. Let's see what's going to happen. I'm going to observe the structure, but it's not acting as overshoot. Why we broke the latest highest high? Okay, this is not what is supposed to happen under overshoot. So when I was watching this, I had to extend the channel, make it a little bit wider, and I adapted to a channel something like this, a little bit steeper one. Still gets a lot of confirmations. The structure still makes sense, and you don't have to be perfect, but you have to be close. And with more and more candles on the chart, you're able to tweak the channel to its final form. So I'm playing this channel, fits really well. Another break in new high, so definitely not acting as overshoot. So by this point, you need to widen the channel. Another potential overshoot, okay. So let's see what's going to happen. You have a new high, first entry long, second entry long, horrible bar. And because we exceeded again, I have to make it a little bit wider again. So this was a bit confusing area. I was really expecting overshoot here, but once EMA keeps holding and when you break this high, you simply have to adapt, okay? There's a wider channel. Now there is not even a good setup. Here we have a second entry long. Problem is, it is quite stacked and look at the tail at the top. This is a horrible bar to go long above. Bad momentum towards the close, so we can't use this candle to go long. Market keeps going higher. Going to draw short and downtrend break. New extreme for the downtrend. And we have another second entry long. Now this was tempting second entry long, but on my chart, the signal bar here didn't have a nice close. Still a little bit of a bearish body. I noticed that few traders had slightly better close. Now if you have that better bar, you can consider I'm going to mark it, but on my chart unfortunately the signal bar is not that great. It is a second entry long, breaking new low. We are trading an uptrend. It barely worked. Let me see. Actually 10 points when the ATR is low like it was today. You definitely want to be scalping 6, maybe 8, but this was a really slow market, but it worked for a quick scalp. But on my chart I skipped it. And now hold on, look at this massive bearish bar. Okay, this bar completely negated all of these bars prior, so this is not what is supposed to happen. Once I saw this, and once you see this, you have to be a little bit careful. EMA is flattening, it is unclear, so I can't really go long just yet. It is an inside bar, but mainly this is really worrisome. Let EMA, so much bearish pressure, so I gotta be careful now. Can we stay above EMA? No. Break a new extreme. So what I want to do now is I want to expect new high this uptrend following the trend line rule. Okay, but I cannot go long randomly below EMA because I simply don't know how many pushes lower there's going to be. I want to see push above EMA and I want to see high low confirmation setup, or I want to see a felt second entry short. But this uptrend needs to get new high. We're able to predict where the market's gonna go. I'm gonna zoom out. You can see clean uptrend. So market definitely needs to test the new high. The sellers are gonna get trapped. Eventually we should make the new high 8 or 9 times out of 10. You can see the important key level that acted as a resistance is now acting as a support. This is why it's important to pay attention to these key levels, because we broke higher out of the trend range, came back, tested it, breakout, pullback, and we see reaction of this key level. You can see buyers are stepping in the market here, and here in fact we have what we call counter trend triple test, one bounce, second bounce, third bounce, and right now you can see once again each new push phase to the downside is smaller and smaller. The lows are getting static, more sideways, indicating bearish depletion. So this is decent setup to consider. A little bit more advanced because this is not super tempting high probability setup to take, but I can mark it if you're a more advanced trader, because you can see the bottoms are starting to get more static, more sideways, bearish depletion. The key level is holding so strongly. Great tier 1 signal bar. If you want to be safe, you want to see that push above EMA and a high low or confirmation setup. Okay, now you're really feeling good. Now you expect some good setup. We're going to test the new high. And market created a new extreme without any pullback here. Quite rare because the momentum was so strong, but you can see perfect price action. Break, new extreme. So what are you going to do now? You have to pause looking to go long. Okay, we can have correction or reversal. So there's going to be a second entry long at the EMA. There is none, but had there been, I would have to pass on it because we just had a break and a new extreme. I cannot sell randomly. You could sell failed second entry long below EMA, but it never formed. We have a failed second entry long now above EMA, but you can't really take it like this. By the way, you would not have this key level at the time, so you can't really take it. It's going a little bit sideways. It is not acting as a sharp reversal because reversal would break below EMA consistently. We now had pushed back above EMA, which is quite confusing. There may be some residual bullish momentum, but at the same time, you cannot go long. We just have a break in new high. You cannot short just yet because the reversal structure is a little bit weak and market keeps working lower. So right now it is getting a little bit easier to read. We have stronger reversal. So I'm going to redraw the downtrend. Going to redraw the uptrend. Let me see. New low, first entry short. So I'm thinking about second entry short, and this is interesting. New low, first entry short, second entry short. Uptrend played out with a break and a new extreme. This downtrend needs to get new extreme. EMA keeps rejecting. This is a second entry short that is also a mini triple test. I was about to short here, but towards the close, you can see the tail at the bottom. Towards the close, it looked nice bearish, but the buyer stepped in and generated such a bad tail at the bottom. This signal bar is not ideal. Once again, story of the day, great context, great setup, but the signal bar is just super weak. Once again, way more aggressive. I can mark it, but we need some cleaner bar. This tail is not that convincing. It worked anyway. Breaking new extreme for the downtrend, and this is important because once again, the high of the day that is transforming into support is generating strong bullish push to the upside, reversal. So at this point, you would draw the trend range, okay? Because you have flat EMA now for quite a while. Move up, move down, move up, move down. So perfect market cycle rule. After breaking new high, we can have consolidation or reversal. And since this key level held, we are entering a consolidation, which means consolidation is simply another word for trend range. New low, first entry short, pullback, second entry short failure. Decent failed second entry short, but I believe it didn't get a trigger, so we cannot enter anyway. Market keeps going higher. Now we have high-low confirmation setup, confirming the failed second entry short. Decent setup, off the channel, off the EMA, failed second entry short, high-low confirmation. Your stop loss goes one tick below the signal bar, so you just have to ride this out a little bit. You can see your stop loss was never hit. There's a consistent micro triple top can reset, so you can really take no setup on the first entry long, can reset, first entry long, can reset, first entry long. So there's no setup, a market created break and a new extreme. We're at the top of the trend range. Now we have a failed breakout out of the trend range. You're quite far away from the EMA. Most breakouts out of trend ranges will fail, so this is decent. Failed breakout setup out of the trend range. Uptrend played out with the break in new high. We even have one leg up, break, second leg up. Okay, EMA keeps holding. Now, when I was watching this, I was eyeing a wider channel, but I cannot go long on a second entry long now because this is still acting as a trend range. But why we have brought two legs? I actually took this high low, but it was not a good setup to take simply because if I'm going to zoom back, main uptrend played out and we are clearly in the trend range. So I had bad impulsive trade here. Never mind, it happens. It was a small stop, but you're not really thinking going long simply because you're at the top of the trend range. Main uptrend played out and even the short one played out with the break in new high. In fact, we have a nice new low, first entry short, second entry short, which is part of the visual failed second entry long, and this is the right setup you want to take. Second entry short because the kill is holding. By the way, I'm going to redraw the downtrend working over something like this. First entry short, resistance is holding, no second entry short, and now it's getting way too late. The market is about to close. This is the overall structure for today. Very predictable price action. We start with a nice trend range, brand new uptrend established, breaking new high, straight into consolidation, which is a trend range. Very few setups on the way up, not that many opportunities, so it is quite hard to get in on this very nice uptrend because you only have various entries. Later on you had a couple decent high probability setups, but the first part of the day, great context, but the single bars were weak, or there were simply very few setups. Either way, I hope you had a great trading day. I'm gonna wrap it up. I'm gonna talk to you next time. Good luck with your trading.